But one thing is clear. Even here in 2025, Bitcoin is still here. It's not dead, it's not banned, it's not gone. It's still volatile, still controversial, and still making people argue at barbecues and Reddit forums like their life depends on it. And it's still the #1 digital asset that makes financial advisors, economists, and tech bros equally all fired up, but for completely different reasons. So, let's step back. No hype, no crypto cults, no Web3 group link. We're going to answer this the way that smart, system-based investors answer every question, with historical context and a clear understanding of risks and opportunity. So, it's 2025. Bitcoin is still alive, it's breathing, and occasionally moonwalking. It still does what it's always done. Exist outside governments, annoy economists, confuse your uncle who thinks that Venmo is Bitcoin, and trend on Twitter every time it moves 5% in either direction. But something is different now. Bitcoin isn't the weird experiment that it was back in 2012. It's not just a fringe tech play or a protest against the financial system anymore. Let's be honest. It's grown up. Bitcoin is no longer some shadow asset. Back in 2015, people called it internet monopoly money. Back in 2018, it was a bubble, just like tulips but with worse PR. In 2020, it got some attention. By 2021, it was chaos and headlines and millionaires made overnight. But in 2025, Bitcoin is still risky, still volatile, but no longer ignored by serious money. So let's walk through what's changed. Number 1, big institutions are now involved. Number 2, Bitcoin ETFs are live and liquid. Number 3, governments are paying attention. Number 4, Wall Street isn't pretending anymore. So, should you still buy it? Now, even with all of this progress, you might still be asking, okay, but should I buy it now? And that is a fair question. Bitcoin hasn't disappeared like BitConnect or Terra Luna, but it also hasn't really delivered a smooth upward journey either. So the question does remain, why is Bitcoin still here? And what makes it different from every failed crypto before it? Let's start with the core reasons it hasn't vanished. Number 1, digital scarcity. Number 2, decentralization. Number 3, it's becoming a store of value. Why you might not want to buy Bitcoin. Okay, now listen up. This isn't a Bitcoin fan club. Nobody here is trying to sell you anything or convince you that it's the future of civilization. So, let's be honest. Bitcoin has some real risks, and not understanding them is exactly how people end up broke, jaded, and swearing off investing altogether. So, here's why you might not want to touch Bitcoin with a 10-foot ledger wallet. Number 1, volatility will test your soul. Let's start with the obvious. Bitcoin is wild. If you're coming from the land of ETFs where 2% swings make headlines, then Bitcoin is a whole different beast. It can drop 20% before breakfast, spike 15% by dinner, and then tank again while you're brushing your teeth. It's like investing in a stock market that's permanently on espresso and emotionally unstable. Bitcoin will test your conviction, your patience, and your blood pressure. And if you're somebody who checks your portfolio obsessively, Bitcoin is financial whiplash. The problem isn't just the volatility though, it's that most people just can't handle it. They say HODL until it drops 40%, then suddenly they're selling everything and blaming the coin instead of their own emotions. If you can't stomach seeing your net worth swing like a mood swing on roller skates, then Bitcoin might just not be for you. Number 2, it's still not currency level useful. Now, let's talk about use case. Sure, Bitcoin was intended to be used like money, peer-to-peer digital cash. But let's be real. You're not paying for coffee with Bitcoin. You're not buying groceries with Bitcoin. And your landlord definitely isn't accepting Bitcoin unless he's also a YouTube day trader. And honestly, that's okay. Bitcoin has moved from currency to store of value. But that shift doesn't really matter. Because if you are hoping to use Bitcoin like PayPal or a debit card, you'll be disappointed. The network can be slow, expensive, and very awkward for day-to-day stuff. It's kind of like trying to use a Ferrari to run errands. Impressive? Sure. But practical? Not unless your grocery store has a valet. Number 3. Security is still a hurdle. Yes, Bitcoin is incredibly secure on the blockchain, but that doesn't mean your personal Bitcoin is safe by default. Most people don't realize the biggest risk with Bitcoin isn't the technology, it's the human using it. If you lose your private key or recovery phrase, then there's no forgot password button. There's no help desk. There's no reset my account. It's just gone. And if you leave your Bitcoin on an exchange that collapses, well, you might as well kiss it goodbye. People say that they want financial freedom until they're handed full responsibility and realize that it's much harder than it sounds. Freedom is fun until it comes with 24 words that you have to memorize like your life depends on it. So, if you're not willing to learn how self-custody works, or you find tech intimidating, then Bitcoin may feel a bit overwhelming. Who should and shouldn't buy Bitcoin in 2025? Okay, let's stop talking about the charts and price reductions. Let's talk about you. Whether or not Bitcoin belongs in your portfolio depends on your personality, your goals, and your actual financial system. You should consider buying Bitcoin if you understand the tech or are willing to put in the effort to learn. You're treating it as a long-term investment, not some get-rich-quick ticket. You're emotionally prepared to hold through 50% dips. You've built a strong foundation with other investments, and you're okay allocating a small portion, 5 to 10% of your total net worth. If that's you, then Bitcoin might be a smart asymmetric bet. You're not putting all your eggs in this basket. You're just adding a small, calculated exposure to a high potential asset. However, you should not buy Bitcoin if you're hoping to double your money in the next 6 months. You panic when prices fall and check your portfolio 17 times a day. You're investing with money that you can't afford to lose. You still haven't paid off your credit card or saved an emergency fund. And you're only buying because a guy on Twitter with laser eyes said it's going to 1 million. This isn't religion. It's not rebellion. It is an investment, and it should be treated like one. Do not confuse financial freedom with financial fantasy. Let's assume that you've thought it through, and you do want to buy Bitcoin. You're not doing it because of FOMO or hype or a TikToker that promised overnight wealth. You want to add it to your portfolio the right way. Here is how smart investors approach it, and how you can too. Number 1. Use dollar cost averaging, DCA. Instead of dumping in a lump sum and praying that it doesn't crash tomorrow, you invest a fixed amount, weekly, bi-weekly, or monthly, no matter what the price is. Number 2. Keep your allocation small. Bitcoin is very powerful, but power can be dangerous if you don't respect it. That's why most experienced investors keep Bitcoin at 5 to 10% of their total net worth. Number 3. Secure your assets. Now, this is the part that most people ignore, until it's too late. Do not store large amounts of Bitcoin on an exchange. Alright, let's say it with me. Not your keys, not your coins. If you do not control your private key, then you do not control your Bitcoin. Get a hardware wallet. Yes, that is a learning curve, but so is getting scammed, and that lesson is far more expensive. Security is part of the deal. Owning Bitcoin is financial freedom, but that freedom comes with responsibility. Nobody's gonna step in to rescue your coins if you mess it up. But the good news, if you follow the basics, it is much easier than it looks. So, should you still buy in 2025? Let's close this out with a system-based summary. We are not here to tell you yes or no. We're simply here to help you answer the question based on your risk tolerance, your strategy, and your financial goals. You should buy Bitcoin in 2025 if you believe in the long-term use case. You treat it as a small piece of your broader portfolio, 5 to 10%. You have a system for buying, holding, and securing it. You understand the risks and don't expect overnight returns. You've already built the foundation with other investments like stocks, real estate, or retirement accounts. and you should probably skip on Bitcoin in 2025 if you're looking to get rich quick, you're scared of volatility or can't sleep when your balance drops, you haven't built an emergency fund or paid off your debt, you don't understand how Bitcoin actually works and have no real interest in learning, and if you'd panic should it lose 50% of its value tomorrow. Bitcoin isn't some shortcut. There's no guarantee here, but it might be a very smart lever if you use it wisely. So, in 2025, it's more accessible, it's more stable, and far more accepted than ever before. But the biggest factor in whether or not it works for you isn't Bitcoin itself, it's your system. Quick question before we wrap this up. If you had $10,000 right now, would you put any of it into Bitcoin? Why or why not? Drop your comments down below. I want to see how everyone's thinking about this in 2025. But that's going to go ahead and wrap up the video for today. If you found this helpful, be sure to hit that like button, subscribe for more smart moves that actually build wealth, and share this with someone who still thinks that Bitcoin is either some sort of scam or the savior of civilization. They don't need hype. They need a framework.